Hello, and welcome to this deep dive. We're here today to try and make sense of some pretty big financial shifts facing UK consumers, well, right now in 2025. It's a really multifaceted situation, isn't it? You've got rising costs, mortgage rates moving around, tax changes that aren't always obvious, and, government schemes too.
It absolutely is. It's a period where really understanding how all these pieces fit together is key for households.
Definitely. And to help guide us through this complex picture, we're really delighted to have James Hargreaves with us. James is a senior economist at the UK Consumer Finance Institute, and he brings well over a decade of experience helping governments and households navigate this kind of economic uncertainty. James, it's fantastic to have you here.
Thanks for having me. It feels like a really crucial time to unpack these financial dynamics and what they actually mean for people day to day.
That's exactly our mission today, to really dig into these changes and get a handle on the impact on your finances. And a very warm welcome to everyone watching Westferry Times.
Thank you. Glad to be here.
So, James, let's jump straight in. If we look at the UK economy in 2025, what's the sort of big picture, your overall assessment?
Well, we're seeing an economy that's definitely in a, shall we say, transitional phase. Inflation has cooled down from those highs we saw back in 2023, which is good news, of course. But importantly, it's still hovering above the Bank of England's 2% target.
Still sticky then.
Yes, exactly. And at the same time, interest rates are still elevated. We are seeing positive wage growth. But for many people, it just hasn't quite caught up with the hike in living costs over the last couple of years.
Which I suppose leads us to the big question everyone's asking. Are we actually out of the cost of living crisis yet?
That's the million-dollar question, isn't it? Look, while perhaps the intensity has eased for some, the financial pressures, they're still very real for a large chunk of the population.
Okay.
Energy costs have, stabilized somewhat. But things like food prices, council tax bills, the cost of borrowing, they're all still putting a real squeeze on household budgets.
And who's feeling it most?
It's particularly acute for renters, I'd say. Young families maybe just starting out, and definitely people on fixed incomes who just have less wiggle room, less flexibility to adjust.
Yeah, that makes sense. Now, interest rates have been a huge topic, especially around mortgages. What's the situation there? What's driving it?
Right. So the Bank of England has kept the base rate up around 4.75%. It's a deliberate strategy, really, to keep inflation under control. But the direct consequence is that borrowing money is just much more expensive now.
And that's hitting homeowners coming off old deals.
Precisely. Especially those needing to remortgage in 2025.
Yeah.
They might be rolling off fixed-rate deals they got when rates were, rock bottom.
Can you give us a sense of the scale? What does that actually look like for someone remortgaging now?
Okay, imagine someone had a mortgage fixed at, say, 2%, a pretty common rate a few years back. Now, they could be looking at new rates around 5.5%, maybe even higher, on a fairly typical mortgage size. That jump could easily mean paying hundreds of pounds more every single month.
Wow, hundreds.
Yes. And faced with that kind of increase, households inevitably have to, rethink their spending. They might cut back savings, maybe delay big purchases they'd planned, cars, holidays, home improvements.
And it's not just mortgage holders feeling this heat, right? How does it filter through to renters?
That's a very important point. Renters often feel the knock-on effect. Landlords themselves might be facing higher mortgage costs on their properties or just increased maintenance costs. It's quite common for them to then pass those increased costs onto tenants through higher rents. So it adds to the wider pressure on housing affordability, really across the board.
Okay, let's shift gears slightly to tax. We've heard this phrase stealth inflation or fiscal drag being used. Can you break that down for us?
Sure. So the government hasn't actually put up the main income tax rates. What they have done is freeze the income thresholds, the points at which you start paying tax or start paying the higher rates.
Right.
Now, as wages go up, partly because of general inflation, more and more people find their earnings crossing over these frozen thresholds. So more of their income gets taxed at a higher rate, even though the rates themselves haven't officially changed. That's fiscal drag. It's a sort of stealth tax rise.
So even if you get a pay rise, you might not actually feel much better off in your pocket.
Exactly that. Your take-home pay might not increase as much as your gross pay suggests. And, while we had those national insurance cuts earlier in the year, which helped a bit,
Yes, I remember those.
for many people, that benefit has been sort of swallowed up by increases elsewhere. Council tax bills have gone up in most places. Some energy levies are still around. And if you're a graduate, student loan repayments might have ticked up too. It all adds up.
It certainly does. What about energy costs? That was such a huge worry. Where are we with energy bills now?
We have seen some easing there, thankfully. The off-gym price cap came down a bit, and the government has brought in some new, more targeted support schemes for uh, the most vulnerable households.
Okay, so some relief.
Some, yes, but, and it's a big but, we need to remember that overall energy prices are still way higher than before the pandemic. We're talking roughly 40% higher.
40%, so still a major budget item.
Absolutely. Managing energy costs is likely still a big challenge for many families,
Yeah.
especially I'd say for people living in older houses, the ones that aren't very energy efficient. They just cost more to heat and light.
And those energy efficiency grants, are they helping?
The scheme exists, yes, the Energy Efficiency Grant Scheme,
Mm,
but the uptake, well, it's been slower than hoped, so lots of people are still stuck with high energy use because upgrading is difficult or expensive.
right. Okay, let's talk about the weekly shop. Food prices. What's happening there and how are people coping?
Food price inflation has definitely come down from its peak, which was incredibly high, but it's proving quite sticky, still sitting around the 6% mark.
Still noticeable then.
Very noticeable. And we're seeing clear changes in how people shop because of it. Lots of switching to supermarket-owned brands, for example, trying to save money compared to the big brands.
Makes sense.
We're also seeing people buying in bulk where it makes sense, maybe sharing bulk purchases, and definitely a bigger focus on cutting down food waste at home, trying to make everything stretch further.
We're also hearing reports, quite worryingly, about people using buy now, pay later, even for groceries. What does that tell you?
Yes, that is a worrying trend. Seeing BNPL used for essentials like food suggests some households are really struggling to cover basic costs from their regular income.
So turning to credit for necessities.
Essentially, yes. It points towards short-term coping mechanisms that could store up trouble later. And we are seeing a broader increase in just general consumer credit use, too. Some might be planned, but it likely reflects that underlying financial strain for quite a few people, particularly families with kids, it seems.
So with all these different pressures, mortgages, tax, food, energy, what's the general mood out there? What's consumer confidence like?
Um, the overall feeling seems to be one of, I'd call it cautious pessimism. Confidence surveys show that while people are sort of managing day to day,
Getting by?
getting by, yes, but there's quite a bit of anxiety about the future. Uncertainty about the economy, about their own financial security down the line.
And what's happening with savings? Are people managing to put anything away?
We've seen a definite drop in savings rates. It's particularly noticeable among younger adults, say under 40. It really suggests that many are having to dip into savings just to cover current living costs. Emergency funds are being eroded.
So short-term survival taking priority over long-term planning.
It appears so for a significant group. The immediate pressures were just outweighing the ability or perhaps the confidence to save for the future right now.
What does all this mean for the wider UK economy? Lower confidence, less saving.
Well, it has a real dampening effect. Lower consumer spending is a major drag on economic growth. If people are cutting back, businesses feel it.
Right.
And that's a key reason why many forecasts are pointing towards pretty sluggish growth for the UK in 2025. Maybe flat GDP, perhaps even flirting with a technical recession if spending doesn't pick up.
So against this backdrop, what have we seen from the government in terms of responses? And are there any big policy shifts being talked about?
The government has brought in measures, like the NI cuts we mentioned, and various energy support schemes, aiming to cushion the blow somewhat.
Mm-hmm.
But there's been quite a bit of debate and criticism, too, about whether that support is targeted effectively enough. Arguments that renters, low-income families, younger workers maybe need more specific help.
Okay.
And we are seeing growing calls for bigger reforms. Things like overhauling the council tax system, finding ways to improve access to affordable credit, not payday loans, and crucially, speeding up house building to tackle affordability long-term.
Are there any glimmers of hope? Any positive signs we can cling to?
Yes, there are a couple of points worth noting. The job market remains pretty strong. Employment is holding up relatively well, which is fundamental for incomes.
That's good.
And wage growth, although it lagged, is gradually starting to catch up with inflation in some areas. Plus, if inflation keeps cooling down, it's possible, maybe towards the end of 2025, that the Bank of England could start thinking about cutting interest rates. That would certainly offer some welcome relief for borrowers and might give the economy a bit of a boost.
Okay, something to watch for. So, for our listeners trying to navigate all this in 2025, what would be your top 3 pieces of practical advice?
Okay, 3 things. First, absolutely crucial. Budget ruthlessly. Know exactly where your money is going. Track spending. That's the first step to finding savings.
Right. Get a grip on it.
Second, be a savvy shopper. Don't just accept the first price. Compare retailers, use discount codes, cashback sites, and definitely compare providers for things like energy, insurance, broadband. Switching can save real money.
Shop around.
Yes. And third, prioritize planning ahead. Even if it's small amounts, try to build or rebuild an emergency fund. That buffer is so important. And if you have existing debts, face them head on, make a plan to tackle them. It really helps long-term stability.
Budget, shop smart, plan ahead. Got it. And finally, looking at the rest of 2025, what's your overall feeling? What should people brace themselves for, or perhaps hope for?
I think we're set for a continued period of adjustment. The worst of the crisis might be behind us, but the recovery looks like it'll be slow and steady rather than spectacular. So
Mhm.
for consumers, the key things will be stay informed about what's happening, be really proactive in managing your own money, and maintain a generally cautious approach to big spending decisions and borrowing. It's about navigating the ongoing uncertainty carefully.
James Hargreaves, thank you so much. That was incredibly insightful, really helpful in breaking it all down.
It was my pleasure. Thanks for the conversation.
And a huge thank you to all of you for tuning in to this deep dive on Westferry Times. We really hope you found this useful. If you did, please do consider subscribing to Westferry Times and maybe share this deep dive with friends or family who might also find it helpful.
Goodbye for now.
From all of us here, thanks again for joining us. Stay informed, stay proactive, and take care. Goodbye.